So thank you for those who made it through the rain. It's great to see everybody and friends and clients. And it's great to be joined with a great panel of VC investors, very experienced dealing with the cross-border environment that continues to be very interesting between the US and China. Maybe just to kick things off, you guys could share briefly about what your fund is all about, your current areas of interest, and maybe a perspective on valuation trends for 2018.
Maybe I can start first.
Ladies first, absolutely.
Yeah, so from Mighty Capital, so we're a Silicon Valley-based early stage investment firm that focus on early stage focus on tech and life science companies. So far, we're still focusing on the Bay Area, but we are looking into like companies that have like a global perspective on, as everyone's like interested now, like a more China-focused kind of like spectrum. So.
I'm Zhou, one of the partners at Amino Capital, and very happy to join you guys and want to share like, the latest trends and everything with all the panelists today.
Sorry, I was outside, didn't realize the panel started. My name is Sanjit, Tang, Investment Director at Intel Capital. For those of you who don't know Intel Capital, we are among the largest VCs out there. We invest roughly $500 million every year in startups globally and have been investing at that pace for like 10 plus years. I invest primarily in AI, computer vision, blockchain, and IoT. And we also tend to lead most of the deals we do. I would say roughly 60 to 70% of the deals we do, we lead. Glad to be here. Thank you for inviting me.
Ben Tseng, I'm with 1955 Capital. We're a firm focused on sustainability and healthcare investments, primarily looking at North American and European companies that have particular applications to markets like China and Southeast Asia. Yeah.
Can you hear me?
Yes.
Hi, my name is Eric. I'm with Silicon Valley Bank, and I lead our effort on a new strategic team that we created called AsiaLink, which helps our clients as well as ourselves on cross-border initiatives ranging from investments to startup banking, as well as personal banking of general partners as well as senior executives of venture-backed startups. Come from a more of a venture side of SVB, where to the rest of the world, people usually hear about the bank, but under the SVB umbrella, we have our venture capital arm called SVB Capital, which makes LP investments into venture funds. We invest directly into companies' equity investments, mostly Series B, price and lead, and the arm is called SVB Capital. So happy to be here tonight. Thanks.
Great. Good afternoon, good evening. My name is Wendy Tang. I'm the partner in DragonFund as well as Draper Associates Fund. And after listening to SVB, I feel like the only slightly more complicated corporate structure than SVB might be the Draper ecosystem. So I'll try to give it a shot. Started on the fund side as well. We've been in Draper funds for the last 12 years. I started the China fund with Tim and a few of my partners. And came back in 2010, and I helped Tim run the incubator here as well as school across the street. But generally, I spend 80% of my time working with early stage investment portfolio companies. Typical check size to start as $1 million, essentially institutional fund. Focus area is pretty broad. It's all early stage technology companies.
Fantastic. And as your host for this segment, my name is Comey with Morrison Foerster, and I focus on cross-border transactional work, mostly between the US and China. On the M&A side, an example would be Walmart Global E-Commerce's $1.5 billion alliance with JD.com. On the VC side, representing a Carnegie Mellon company called Platoon, and its fundraising from SoftBank and Advantic last fall for $93 million. Sanjit, to start, Sanjit, Zhou, and Eric, one of the things that has happened in the Bay Area at least is with the arrival of all flavors of capital from China, we sort of have had corporate VC on steroids in the form of not only BAT, but TMD with Tudo and Meituan and Didi Chuxing doing all kinds of things in their own investing modes, not to mention SoftBank. And so how have these actors influenced the opportunities you're seeing? Do you compete? How has it affected the investing landscape when you're evaluating companies?
I think there's definitely a rise of number of corporate funds, and the fundamental reason there is that a lot of the big corporates are feeling that they're not getting the fire of the innovation in the external ecosystem, and they're feeling their internal labs or research divisions are not really bringing out the next big thing for them. So they don't want to miss out on what's happening outside. That's, I think, at an innovation level, why that we are seeing a lot of corporate VC funds getting picked up. Jet, BAT, you mentioned others, a long list in the last few years. But at the same time, yes, it increases competition, but I think if you look at the grand scheme of things, I think there is probably one new VC fund getting launched in Silicon Valley every 2 weeks. So every conference or event, every conference or event I go to, I see one person I know now having created his own seed/Series A fund, and that's where most people start. So I think in the grand scheme of things, corporates are not diluting that volume of funds picture. I think at the end of the day, venture is not about dollars. Venture is really about a dollar plus value equation. And whether it is corporates or private VCs, doesn't matter. Whoever can provide value to startups by helping them expand the company, bringing customers, bringing partners, giving strategy advice, those are the ones who get the best deals. Yes, competition increases, but at the end of the day, I think it's not being that diluted by just the new corporate funds picked up. It's getting diluted overall.
Sue and Eric, your comment?
Yeah, so we totally agree with what you just mentioned. And in the meantime, we actually found that BAT and TMD and all this new type of giants in China, they actually raise a lot of money, so they have capital to spend. And they have problems in China because, as you know, that for social mobile, the apps downloads has been plateaued. So how do they expand? And they have cash inside. So international expansion is actually a natural choice for them. So you will actually feel that recently, we have been in venture field for early stage for 5 years, and our company was acquired by Facebook and by clients like Google and Amazon and all those giants in the US. And recently we have a company that was acquired by a public company from China. And they were not looking for something that they have been looking for in the past, 10 years, and they actually not looking for profitable companies. They're looking for innovation, and they're looking for research, R&D capability talents. So that's why the company that was acquired by this public company in China was actually stayed in Silicon Valley and has become their R&D center in Silicon Valley. So that's the new trend. And another thing is, so they actually perform more and more similar to Silicon Valley companies, especially for their corporate venture efforts. So I would say that's a great opportunity for companies that you wanted to actually have a step, in China, but in the meantime, you want to still be independent and still stay in Silicon Valley.
Yeah, I just want to say I totally agree with Sue and Sanjit's points. I think we are seeing at SVB, there's a fundamental difference between the corporate giants between China and the US, right? If you look at US today, Facebook, Amazon, Alphabet, and of the world, and Microsoft, the way they're investing in early stage and how companies perceive these corporates in the US is way different than how Chinese companies at early stage, or even any stage prior than Series B, even including Series B, and how they view Baidu and Ali and Tencent. If you know China, or there's a kind of recent term that was just created, if you look at companies there, it's no longer to B or to C, it's more like to A, T, right? Before Series B, you kind of aligned yourself at what corporate and which particular B or A or T they want to take the money from, and how you want to position your products and services, and to be acquired or to be acqui-hired by that corporate down the road. If you look at U.S., companies at early stage, they're pretty cautious about what corporates want to actually take, and I don't want to make companies trying to make sure that I don't take corporate strategic money early on. And the other thing I think we're seeing happening in China, for any of you that are at CES or JP Morgan this year, you probably started to see a lot more Chinese corporations, public or private, later stage tech, both tech and life science, that show up that you've never heard of, right? What's happening in China that we're seeing is these large, the BATs of the world, or Meituan, Dianping of the world, they're, to a certain extent, they can't really compete with BAT, right? The BAT, the power and influence it has at the ecosystem, whether it's directly investing into companies or investing in funds in China, as well as here in the US, right? To Sanjit's point, we see last year there were over 75 new funds closed or fund ones here in the US. And a lot of these funds were formed by Chinese founders and founding GPs that come from either tech or operations background. And you start to see the JDs and the Ollie's of the world that are investing in these funds as an LP. So the fundamental influence these three giants have in China and in venture in the ecosystem overall is unparalleled, and which creating a gap in between and causing these smaller tech players, right? They're just not giant, but they're still big, to seek new growth opportunities in China as well as outside of China. So we definitely started seeing that happening.
Yeah, and so just within fintech then, and maybe Wendy and Andy and Ben can comment a little bit, where for companies here, Silicon Valley, Soma, where do you see the best opportunities? If you're already an investor looking to invest, what are you telling them about what they should be doing to pursue China? What are those sectors and subsectors within fintech that you think will fit best and play most effectively in the Chinese economy, not just in the US?
Thanks. I think you look at it from, first it's about whether China's focus is now on fintech. If you look at the government 13.5 plan, one of the main focus is fintech. And as a startup, say in the Valley or even like outside of China, and if you're in fintech, you wanted to first look at what does the customers or the consumers in China are looking for from the fintech angle. So when I was in Hong Kong, there's a unicorn in Hong Kong called WeLab. It's founded in Hong Kong, but it's actually, the main market is in China. So basically looking at how mobile payments and all those kind of transactions in China. So I think from that angle, it's when you are a startup, you're looking at that. Do you have that specific or special technology that can enable you to address the specific needs of consumers in China? And then secondly, whether you are attractive enough for some of these buyers that we were talking about, the BAT. And even though they're BAT, they're like internet companies. But if you look at them, they've been buying up some of the fintech companies here, and even like companies like Riven, they're buying into SoFi. So I think that's the two main things. It's your technology, and then whether you're actually addressing the needs of like the consumers in the China market.
Andy and Ben, what are your thoughts?
Sure, I think Wendy hit it quite aptly. I think the main thing that we extend beyond that is I think it's absolutely important to remember that the Chinese market and the American markets are fairly different. My firm doesn't focus particularly on fintech, but we sort of apply the same lessons. Not only do you want to make sure that there's a sizable market with a sizable source of demand, you also need to make sure that what you're doing actually fit with that market. Because of different regulatory practices, because of the, whether it's BAT or TMD or whatever groups are out there, you have very different channel dynamics, very different buying behavior, very different regulatory factors. And so I think it's absolutely important to make sure that what you're doing translates literally and figuratively very well to the new market. And also that the way that you approach this new market allows you to create channel partners who will work in your favor as opposed to replicate and localize in a much faster and much better way than I think most American companies realize the Chinese market.
I just wanted to add one thing that you might need to be aware of is when you're targeting the Chinese market, you have to be prepared that the data that you collected will be under scrutiny from the Chinese government.
So I want to say, I think the most important lesson I've learned spending 5 years in China, starting the fund and starting businesses, is that don't make political mistakes when you're making investment decisions. What I mean by that is that there are certain industries the Chinese government regulates very carefully. So you may think you have a good technology, which we thought we did. We invested, we made the company started making money and it's getting big. But at some point, the government will say, "Oh, sorry, this is national security. Maybe you shouldn't have a license, or maybe one of our state-owned enterprises should require you." So I think that is a challenge. And I'll tie this back to the first question you asked, Chuck, and that is the role of the corporate investor. I actually cut my teeth in venture from Siemens Ventures, later became Infinium Ventures. This is like 17 years ago. And I remember we used to be I wouldn't say the ugly girl, the ugly guy on the dance floor that no one wants to dance with. We had to pitch really hard because no one understood. And to our own fault, we also didn't know the rules. Right? When we invest, we want to put in M&A clause or right of first refusal, all that kind of bells and whistles. So what ended up happening was we get all this adverse selection. We got all the bad deals, right? The people who won't take those bad terms are bad companies. So if you end up with all the bad companies, you lose money. But what we're seeing today, this is corporate venture 3.0, right? Actually, a lot of the leadership will try that Intel Capital, right? Don't take more seats, take fewer seats. Let the companies do their thing. But you add value as a corporate. And I remember the way in the corporate 2.0 that I came up with, the slogan was, it's the 3 C's of corporate investing. It's the capital, channel, and conviction, right? Capital, balance sheet, look at these big companies, they're 10 times, 15 times, 100 times larger than venture, more money, right? Channel, look at how many sales force they have. Right? Yes, venture fund GPs, we have lots of connections. But man, I can't beat a 10,000 people at Salesforce. Right? Conviction. All right, venture funds, we've been around for a long time. Right? But look at these corporates, they're not going anywhere. Right? Especially if you look at internet, it's becoming so concentrated. And I don't think it's a good thing, frankly. I'm just sort of citing the reality. Right? If you play Monopoly for 50 rounds, guess what happens? 2 people with all the most money. Right? Yes. Then what happens? People break the board and say, let's start over. And so this sort of gets into maybe when we wonder, like, what does it take to unseat one of these giants? Right? So give you a little clue. So I think blockchain is one of those things that could potentially convince young people a decentralized model that could restart something completely different. Right? Start from the bottom, decentralize, you keep your information. There I think you have a chance. But before that, go back to fintech China, you better have a partner. I don't care if you have the best AI engine for underwriting. You don't have a license, so you stop at that. Or you might be able to operate without a license, but eventually get big enough, so you'll just not be able to play them.
So you have
2 points. I totally agree. And one thing is that from our 5 years experience investing in data-driven company, over 130, and then I would say that there are 2 areas that definitely we see for early stage investors and entrepreneurs as a huge opportunity disrupted by AI. One is healthcare, the other is fintech. because these two have been highly regulated in the US, also in China, and it hasn't been eaten by software. So blockchain and AI have a chance to actually disrupt these two areas. Matter of fact, we actually have had the largest return in these two areas. And another point is that China actually has been very much advanced in terms of fintech, especially cashless society. And there are so many opportunities, and people, for some reason, in China, you give away your cell phone number for getting access on Wi-Fi in airports. So privacy is not a big deal, in China. So it's easier for a carrier or for companies to actually collect their data. And another thing is,
And use the data.
I know. And another thing is, in China, you have seen that WeChat, they actually have a WePay. I think last month, they actually announced that WePay got license to sell mutual funds. It's much more advanced than Facebook or Google has been doing. So, and matter of fact, this afternoon, Alibaba's Ant Financial is actually in our office, and they were trying to actually compete with WePay, and then they were trying to actually work with Silicon Valley startups. If you have electrical skills, just imagine those robo-advisors, right? So in the old days, one advisor managed one client. And nowadays, if you just use robo-advisor, one top-tier advisor, financial advisor, could actually advise millions of people at the same time. So that's tremendous, and the data actually impact in China could be so advanced, and if you can get the algorithm right, you have a chance. Maybe you can come back to the US. So
That's right.
2 points.
In China, all things are possible, nothing simple. But Andy mentioned blockchain, and I think that's interesting when you see announcements by big U.S. companies, UPS, IBM, was in the news, Boeing, and so forth. And we'll talk about China in a minute. But in your world, sitting here with an eye to China, how are you thinking about blockchain, and what within this widely debated topic is interesting to you, and where are you focusing?
Chinese government has an embargo on money leaving China. They don't allow, There is a way out, and that's called blockchain. You get onto Bitcoin, you start buying Bitcoins, get the Bitcoins out, international, it's an international currency. There's always a way out, and I think that's just one example how blockchain is going to change how multiple industries operate, starting with fintech. In fintech, Bitcoin is an example, and money transfer between countries is another example. The next is going to be supply chain. If you go to Walgreens today, you buy Tylenol, you're buying Tylenol with the trust that, hey, this is from a brand, and I'm buying in a retailer that I trust called Walgreens. That's it. What if you actually had data that this particular drug was manufactured in X, went through this supply chain, and here's the temperature data, was it within spec or not, and then you decide to buy, right? So there's a lot of disruption that blockchain is going to bring, but I think two industries that are going to start the wave of blockchain are number one, fintech, and number two, supply chain. And you can already see the news. Walmart is evaluating blockchain, trying to implement it for its supply chain. You can do a lot of things with blockchain. You can do smart contracts. You can do vendor payments in a much more cost-efficient and faster manner. Australian Stock Exchange is looking at moving to blockchain for its trading platform. You buy a stock publicly. It's a shame that it takes another 1 or 2 days for settlement to happen. Or you sell it takes 1 or 2 days. Come on, we live in the world of internet, right? So blockchain is going to disrupt a lot of that. And I think the companies that are, and I actually think we shouldn't look at just blockchain or AI particularly. I think they're part of a bigger wave of digitization. And companies or organizations or even countries that are adopting that wave of digitization are going to implement blockchain first, are going to implement AI on the data that comes out of blockchain. So these become the or the ingredient technologies for the digitization wave. And eventually this wave will transform not just companies or sectors, but actually it will change the geographical boundaries, the way we see the world, the way we look at countries. It's going to be very different. There are going to be networks formed cross countries for a particular theme of blockchain.
Other thoughts on blockchain as an investment thesis?
I totally agree, and actually, you guys work with one of our portfolio companies, SkillChain. And Sharam and Zaki, they actually, it's one of the pioneers, we invested in them 2014, and then they work with a lot of banks. Actually, they work with Wells Fargo and Commonwealth, two banks, actually working with SkillChain to help this importer-exporter to eliminate letter credits, or you can say that make letter credits very, very low cost. And then also they integrate, because everything is on smart contract. So they integrate with IoT. The containers right now all have like IoT sensors and everything. So the smart contract knows that the container left to Houston, that heading for Qingdao in China. So everything's automatically transferred. The payment, guaranteed payment transferred. And remember, this is not through just one bank, but two banks. So it's happening. Yeah.
Thoughts, Andy?
Yeah, so what I want to share is, I've been in this space since '99, just technology innovation space, and this is probably the largest single disruptive technology I've seen since the internet. I can't quite figure out if this is like internet 1997 or internet 1999. In other words, there's a lot of speculative capital. Right, there are 2 more years, or there's 6 more months. But what I am sure, though, is that if you take your investment horizon to 2005, 2006, right, then once all this dust settles, you'll end up with something really interesting. Right? A lot of companies will disappear, just like those e-commerce companies that we dreamed about in 1997, 1999. Right? All good concepts, but they couldn't pull off. Some of them were sort of ahead of their times. But the general direction is right. So we as investors in our entrepreneurial team, our job is sort of keep going, find the true north, keep executing, and not get distracted by all this speculation. And we've been fortunate because we've started this early, and it's been a long journey. Right? What most of the public sort of noticed this year, we've been at it for the last 4 or 5 years. And then when, in fact, in China, the top 5 ICOs, we are in 4 of them. We incubated Qtum, we're in VeChain, we're in Alph, Metaverse, we're in Hcash, just to name a few. And I sincerely think this is something that's interesting, and that is probably the most credible way to unseat these big giants. Because you're changing the underlying technology, right? And you're offering something that giants wouldn't offer to the customers. Otherwise, there's no real good reason for people to leave Facebook or to leave Google or Baidu or WeChat. Right?
It's too good right now.
Yeah. There's no real good reason. But if you tell them, hey, you leave Facebook, you can't have your social graph. And you start thinking, well, wait a minute, I want to know my Facebook. So that's kind of the one for me. So maybe I do want a social media site where I own my social graph, not the company. It's decentralized. You leave it on the blockchain, and it's private to me, right? Or maybe I don't trust my credit card number with Visa, right? I may want to hold it myself because as important and impressive as I think I am, I'm actually not that. Hackers much rather hack Visa than hacking my phone, right? So if I keep my own information, maybe I'm better off. So there's some small seam of opportunity where if the technology comes in, you can pry this all open. And when it does open, the floodgate opens. It's very quickly these consumers will switch.
Yeah, and to his point about me holding the credit card, it's actually fascinating to see how the world goes from distributed computing to client-server model, and now drawing back to distributed computing. I actually think we're going to end up with a balance somewhere in between. But the pendulum rather, is definitely going to shift more towards distributed computing, and blockchain can be a driver, but there are some other drivers trying to create that model, recreate that model rather.
Certainly, whether you're a millennial or not, the fact that your credit card is not a question of if, but when that's going to be hacked.
No. I really believe there are only two types of companies or individuals. The ones that have been hacked and know about it, and the ones that have been hacked but don't know yet.
That's absolutely true. So it's hard to talk about blockchain and then come on to ICOs, which was also mentioned. So company comes to you guys raising an ICO, what do you tell them?
I say,
It's an interesting investor proposition.
it is. The first question I asked, and then we started asking these two tough questions probably mid last year. Right? Early last year, we encouraged them, you should do it, you should do it. But now, like, do you really want to do it? Right? Because I do think this is an area that will get regulated. You're looking more and more like something FINRA and SEC are interested in. So you should start behaving as such. So I asked two questions. One, does your business naturally tokenize? Right? If your business isn't tokenized, don't use this as a channel to raise money. Two, does your business benefit from decentralization? Right? Does your business require a bunch of users from everywhere you're using it and you can benefit from it? If so, you should pursue it.
Yeah, I totally agree, and I think it's a wave, and it's very hard to tell what's actually happening behind the scenes in this wave. And regulation will come, but till then, you can all ride the wave. But at the same time, it comes down to, is this really for you? Does it really fit your product model as well as your business model? And then from a fundraising model, you have to start looking at, hey, back to the dollar plus value equation, what do you get beyond the dollars? Right? I think it's fabulous, more power to the startups for being able to raise money with that. With ICOs, but what happens after that is really the big question.
And I'm assuming that, well, correct me if I'm wrong, but would an ICO ever, given your LPs, have you guys ever invested in ICO? Would you ever consider doing so?
We actually started to invest in blockchain technology in 2014. And we actually invest in skill chain and also string. And then we were forced to actually participate in ICO and pre-ICO.
Yes.
Because at string, we have, group of people, talented, and got their bachelor's degree at age of 14, and super cool technology, blockchain, protocol, and they want to disrupt the next Ethereum, and it's really great. However, they plan to do an ICO Definity in the year of 2018, and then a lot of the value will shift to the project and token. So we believe, and we also trusted and we have faith in this project because it's actually solved a lot of fundamental problems, and also I think it's really a great model because the value, so if you start a company, the owner owns 80%. However, if you want to do an ICO, the project, the team only owns 15 to 20%. And they want to give away the token and to contributors and to the investors and to the top tier mathematicians. So it's really beautiful economy that actually designed within this beautiful Definity protocol. So that's why we believe in it and we actually have to participate in it. So not just the Definity, and also Kyber, and also, Kyber was spin off from a laboratory. And the PI was actually previously a student of Song at UC Berkeley. Based on 6 years of research, they want to do a decentralized exchange. And that's a typical venture investment target, right? However, when we talked to them and they were saying, I'm sorry, I'm not raising equity, we're raising tokens.
Yeah.
So then we have to invest in them.
We have to.
I know, if it's the next web, it's a shame that we don't invest, as an early investor, we don't invest in.
All right, so that's one perspective. How about the rest of you? I'm very curious.
So I think if you look at ICO today, over the last year, that's 4.3 billion raised through ICO overall total. And I think in our opinion, there are really two classes of companies that are raising ICOs today, right? One class, which is the best class, these are companies that are on the forefront of blockchain technologies that are truly disrupting in each of these sectors they're in. The other, which is a worse half, are those companies that traditionally would not be able to raise capital from traditional venture investors, but instead they're now raising ICOs, right? That's why you start to see companies, now naming, you probably have seen some of the names already, but now naming them here, valuation slashing and by 35% after 3 days of ICO. You start to see companies that their management team disappear after a couple of days after ICO, right? And certainly there's in the U.S. the regulators are caught off guard. They're way behind of their time, and they're now just catching up. But what's interesting is if you think about ICO as a new asset class that is booming, just like any other asset class, venture or other alternative investments. Assuming if there's 80% failure rate, and the rest of 20% of the companies that raise ICOs that do well, that return capital in the end, will likely create a new asset class through ICO and eventually attract more and more capital getting into this asset class. So there is, to a certain extent, there is an opportunity for ICOs to disrupt the traditional venture ecosystem at some point. But I think for a lot of the venture investors, intuitively the value of the token should go down, and the value of your equity should go up in the long run, right? That's how this should work. But this is not happening at the moment. I think that's why you start to see a lot of investors do think there's still more speculation in this. But because of the popularity that ICO has been gaining the last year, they are forced to really kind of participate. If you look at Telegram, right, where Benchmark and Lightspeed are participating along with the traditional money source of ICOs. So.
Yeah. So and it's astounding because this is a type of a security for which there is no way to liquidate. There's no way now to monetize.
Is that a security?
They have to do it correctly. We have to find an exemption. Either it's Reg S or Reg D, and so that's the right way to do it. We can't crowdsource through Facebook and Twitter. That's what Munchie did when he got Neil. So quickly to finish on the topic of liquidity, which I know you guys are all interested in, there's increasing indications that I'm getting that there is going to be more interest from China to list in the US. Is that wrong? Are you seeing something similar? And if so, what are the prospects that you see? People are contacting me about this, and I'm just curious what your views are on the arbitrage between US, A-share, Hong Kong, all that as far as the liquidity, and then maybe also the IPO versus the M&A market. And we can start from Andy and work our way this way.
Sure. So we have gone sort of full circle. In 2005, we had this CINA model where we have Cayman structure, and you do all your domestic operations, and then the Cayman parent goes public in the U.S. And that worked well for a while, continued to work. But then there's the Chinese domestic market opened up, and we suddenly realized, well, we could go IPO in the Chinese market for literally 10 times better valuation. Like, why wouldn't we do that? So some of our companies then flipped back But in the process of flipping back, then that market changes, and sometimes you can't go IPO, and then you can't go back to the US. So it's sort of, sometimes I feel like there's almost like a trap, right? You see there's a lot of money, you want to go get it, but the moment you go over there, there's no more money left, and you can't go back. So I think there's maybe some of that, this is not exactly the right analogy, but it's the devil you know, right? You know NASDAQ is low valuation, or relatively low valuation. It's still good outcome, right? But at least you know it works. But if you go for this 10x seduction, maybe you end up with nothing. But sometimes maybe some people decided to just roll a dice. So
30 seconds on 10x seduction. Eric?
this might have to be a private.
Yeah, so we, so SVB are fund of funds and direct investments. We don't really make China investments, so not too much comment on there. But I think one reverse trend that we are seeing through the funds that we've invested, as well as some of the client funds that we're partnering with in China, is there's an increased demand and boom of R&B funds. Local R&B funds that are investing in Chinese companies, as well as with the aim of taking these companies public in China, as well as Hong Kong, rather than here in the U.S.
Got it. Ben?
Yeah, I completely agree with everything Andy said. It's been interesting to watch that pendulum go back and forth. I think there's always going to be a natural balance going back and forth. I think what we're seeing is, I would agree with the sentiment that you expressed, Chuck, which is just that I think there are a lot of folks who are seeing difficulties listing in the Chinese market because of the backlog, because of some of the standards that the Chinese government have imposed. And so I think there certainly are a lot of folks who are going to look more at the US again. But similarly, there are certain things that just make more sense to list in China, i.e., I don't know, the last time I remember a nice big, Andy may know, the last time I saw a big semiconductor IPO in the United States, whereas I think in China, for that and for certain classes of healthcare, for instance, that's probably the best market to go after.
What about Hong Kong Stock Exchange? Because they're going after it.
Having been challenged
Just to
by
answer that, I think Hong Kong compared to China, from especially for healthcare companies, I think China still has a better valuation and attractiveness for the investors return standpoint.
Okay, Sue?
We actually, so it's very good question. And in the meantime, I want to say from our portfolio company's perspective, because we invest over 100 companies in Silicon Valley, and then a lot of them have grown to be mature between like 100 million valuation to 2 billion, and then most of them are actually in data space. So a lot of them in healthcare data or fintech data, and in China, those are highly regulated industry. So what they were doing is that we're helping them actually have a subsidiary Hong Kong, and then have a WUFI in China, and then the next step is have a joint venture in China, and that entity in China, actually we're helping them to go public in Hong Kong.
That's really the flavor of the month, would be the equity investment here to the emerging company or late stage, and then maybe they're already public, and then the joint venture, emphasize joint venture in China because of the regulations. Sanjit, very quickly.
Yeah, I think I agree. I don't want to repeat what was said. The only other point here is some of the Chinese big corporates have been trying to, and have in some cases successful also, in buying US companies, because the US companies' valuations are a little more reasonable, and then take them to China market, expand them to China, and then go IPO there at a much higher valuation. So that's another bullet point to add in this discussion. And I think we'll keep seeing a trend of pendulum getting shifted between whether it's Hong Kong market or Shanghai Stock Exchange or New York, and we'll see where it goes.
Okay, well, I'm sure there are many other questions that you guys have too. Our panelists are all going to hang around, so feel free to reach out to them, and thanks again for coming tonight.